Good afternoon, everybody. I'm Barry McGuire, and today it's Barry McGuire's Creative Real Estate Education Group. Today we're going to talk about foreclosures, judicial listings, the holy grail of real estate. Those are the properties that you can head off into court and without too much trouble pick up, a $400,000 property for $250,000. And it's like falling off a log. At least that is the general myth that's going on. Maybe it's not quite as mythy as that. But to help us out today, we've got the redoubtable James Knull, head honcho with the Mogul Real Estate Group. James knows a ton about real estate, including foreclosures. And he's graciously agreed to come on today and just have a discussion about foreclosures, what they're really about, where you find them, how they work. Should investors be involved, and just get the perspective of a very successful realtor to help us along. So without any further, we're going to get James in here and we're going to have a chat. James, there you are.
Hey Barry, how are you?
Doing well, thank you. How are you?
I am doing fantastic. Thanks for having me on your broadcast today. It's great to be here.
Welcome. You're welcome. Well, it's always fun when we get a chance to yak. So today it's about foreclosures and judicial listings and things like that. Over the years, my observation has been that a lot of people believe that there's always a deal in a foreclosure and you can pick them up pretty easily and that might be true or it might not. So, from your perspective as a realtor who knows his way around the block, give us your general overview of foreclosures and judicial listings before we get into some of the specifics. How do they show up for you? What do you think about them?
Yeah, I think foreclosures, there is a bit of a myth, I would say, that foreclosures automatically mean that it's a good deal. And when we say good deal, I mean, a deal that's cheaper than market value. And that's not always the case. They're not always cheaper than market value. So that would be, and we'll get into that in just a little bit here. But that's one of the things about foreclosures that we need to get into is I often look at foreclosures as being something that we need to treat similar to any other property in the market. And the way that they typically pop up is the person doing the foreclosing, or entity, I should say, which is typically a bank or a lender, contracts a realtor to put that property on the market. So you're going to see most foreclosures ending up right on the good old MLS system, because the bank wants to put them on the open market, because the open market is typically the place where you're going to get top market dollar. The property is going to get the most eyes on it. And as a result of getting the most eyes, it's going to be exposed to the most opportunity to sell it. So that's, one thing to talk about with foreclosures. I'd say the next piece to consider is that the mythical deals that happen in the foreclosure world are often the people who are in pre-foreclosure, which is a huge part of your education system, is, finding those people who are in circumstances where they really need to sell. So today, I think we're just going to talk about, the timeline has expired, the lender has issued a foreclosure notice, and the owner of the property is out of the picture, and now it's the lender, the bank, and a law firm handling that sale.
Yes, that's what we're going to certainly start out on today. So that's a good sharp focus for people. So when you're dealing with a foreclosure, the bank, the lender have sent their demand letters to the borrower who hasn't been paying. They've made phone calls. They've tried to get the borrower to bring it all back into the loan back into good standing. That hasn't worked. And finally, the bank or lender says to the lawyer, okay, not working, crank up the foreclosure process. And once that happens, as soon as it goes to the lawyers, as they say, then you have to deal with the lawyer. There's no more going back to the bank or the lender or whichever department that bank or lender handles that. You got to deal with the lawyer, correct?
That's right. That's right.
So,
yeah. So the lawyer is kind of the funnel spot through which all the communication flows.
Yeah.
So if we're seeing a property listed on the market and you want to put in an offer on that property, you've got your buyer's agent. You say, hey, Mr. Buyer's agent or Mrs. Buyer's agent, we are looking to put an offer on this here property. Well, when we submit that property, it actually goes to the lawyer representing the bank first. Excuse
So
me.
it runs through the buyer's real estate, their realtor, their agent, buyer's
That's
agent,
right.
seller's
That's right.
agent, sorry. And that seller's agent sends it off to the supervising lawyer at the law firm.
That's right. So in a normal transaction, quote unquote, buyer's agent to seller's agent to vendor, the decision maker on behalf of the vendor in that foreclosure is in fact the lawyer representing the bank. So the bank isn't really in the business of micromanaging in every property they have that's in foreclosure. Because it's a legal process to send a lender or a borrower, I should say, to send a borrower through the foreclosure process, a lawyer gets involved. So that's going to segue into a conversation about getting a deal with a foreclosure. So for example, let's say that you see a scorching hot deal on the old MLS, and whether that's you're in the right place at the right time, or the selling realtor and the seller priced it really low to sell quick, or maybe the seller and selling realtor didn't realize the true value of the property and they underpriced it. Those types of opportunities exist, and if you're in the right place, the right time, and you act quickly, maybe you write the offer at 6 p.m. in the evening on a Friday night with a tight timeline, and you have it pending on 10 o'clock at night on a Friday before the wave of buyers comes through over the weekend, and you skillfully avoided being in a bidding war. Well, that doesn't happen with the foreclosure, because as we know, you lawyers like to work office hours that typically range between 9 and 4, sometimes 10 to 3, depending on the law firm and the lawyer.
Sure.
And typically for a lot of lawyers, that lunch break is not an hour of the day that work happens in. And so if you submit that offer on the Friday night thinking you're going to sneak in there and get yourself a deal, well, that's not the case. That offer is just going to sit in limbo until the acting lawyer gets into the office on Monday. So you don't have the same agility and flexibility to get in there quick and make a deal happen. Everything gets slowed right down just by virtue of the decision-making parties keeping regular, if not limited, business hours.
Yeah. Well, what about this part? I'll just ask you the question, and then we can
Please do.
Kind of flesh it out a little bit. So when you're on writing up an offer to send off to the seller's agent on a foreclosure, is it you write up a normal offer on the normal real estate purchase contract for an MLS deal? You write it up, you send it off. Does it get any special treatment over at the seller's agent's end of things, or maybe special treatment once it gets to the lawyer at the bank?
Well, let's roll the clock back even further in terms of writing the offer to begin with. Okay. So here's another little tidbit about buying on foreclosures. And when you buy a foreclosure, we buy it in a way that's called as is, where is, which, I mean, you're the lawyer, you of course know that that's a legal term that basically means, in layman's terms, you get what you get, and we as the sellers hold zero liability, responsibility, or ongoing commitment to ensure any condition whatsoever of the property in any way. That makes buying the foreclosure a little bit riskier, because sometimes you can write an offer with conditions. Sometimes, and when I say conditions, I mean an inspection condition. But when you write an offer on a foreclosure, well, that inspection is for your information only. If something comes out of that inspection that you don't like, your option is to not proceed buying the property. Or let's say that you buy the property, and on day one of owning that property, water starts pouring into the basement, or you find some mold in the attic, or any other, I mean, you name it. We can use our creativity all day long, but some nasty defect rears its ugly head that you didn't notice at first. Again, because you've bought the property as is, where is, that's on you as the buyer. You have no legal leg to stand on once you buy that property. Now, to get a little bit deeper on that, that also applies to condominium property. So if there's a wacky situation going on with the condo board, unpaid condo fees, unpaid special assessments, pending special assessments, you name it, that's all on the buyer. The final piece, and Barry, we know all about this one, is the real property report. So you will not get a real property report. A real property report it's a engineer's drawing of where the property sits on the land and where the land sits on the property. So if there's something funky going on with the real property report, and some common examples would be a deck that's there that's not supposed to be there, or a fence that was built in the wrong place, or a patio that was constructed too close to the property line, or a garage that was constructed too close to the property line, et cetera, et cetera, et cetera. Again, all of those potential red flags are on you as the buyer. So to kind of circle back to the original question, which is what do we see in the offer? Well, usually we write it on the standard Alberta Real Estate Association purchase agreement, but the section about the seller having any ongoing commitments to you as a buyer, that all gets deleted. Everything about the real property report, everything about disclosures, everything about ongoing commitment to the property for defects, and typically a final document called a Schedule A is tacked on to the back of that contract to further articulate and entrench the fact that, hey, Mr. Buyer or Mrs. Buyer, this is all you. We as the sellers hold no responsibility whatsoever. So when you ask your buyer's agent to draft that contract, you're drafting it, usually a typical contract with a whole schwack of stuff crossed out with a Schedule A attached to it that in essence ensures in no uncertain terms in writing, crystal clear, that that seller is not warrantying or representing anything whatsoever to do with that property.
Yeah. Yeah. It's amazing looking at foreclosure offers because there's so much that is scratched out of the offer. And then the 2 pages that like those Schedule A's are at least 2 pages, all of which go into great detail about what the seller, the bank, the foreclosing bank, is not going to do for you. I mean, it's
100%.
It's very creative how many times that they can say the same thing in different ways, all of which we're not doing anything for you. So, I had a file just a couple of weeks ago where the buyer thought that he had some information about the tenants in the building, but it wasn't promised by the bank. And then post closing, he found out his information was wrong, and he asked me to go back to the foreclosing lawyer to get some more information on a couple of tenants. And I think I made the foreclosing lawyer's day. I told my guy, I said, listen, I'll ask, but I know what the answer is. The foreclosing lawyer called me up and he said, Barry, this is the best chuckle I've had all day. Is your buyer client actually asking us, the bank, to tell him something that is useful? I went, yeah, it is. Are you going to help us out? He went, no.
It gets even deeper than that. And this is the one that really bakes my noodle is so if you're buying a regular old property from a regular old seller, a retail transaction, let's call it, you have an expectation and a clause in the contract saying that the property should be in the same or better condition as when you viewed it when you wrote the offer to purchase. Seems pretty reasonable.
Yes.
And a foreclosure, even that gets waived. So if, some sort of wacky circumstance happens between you getting your offer accepted and closing, again, that's still on you as the buyer, which seems like a head scratcher, but let's just pick a couple of scenarios to illustrate that are not particularly unreasonable. So let's say that there's a hailstorm that wreaks havoc on the shingles, or let's say that squatters start squatting in this foreclosed property, or let's say that one mouse does what mice do and turns into dozens of mice in the duration between condition waiver and closing. Again, rare, but not unreasonable. Or let's say that some bandits ransack the property and all of the appliances are gone. These are all scenarios that, unfortunately, you as the buyer are on the hook for because of the Schedule A that you signed. So when we're talking foreclosures, I hope this is, lighting a light bulb that says there is a level of caution that you need to proceed with and a variability of liability that you need to accept when buying a foreclosure that don't apply in a normal transaction and can really put you in a pickle if you're not careful.
Yeah, no, that is all true. Sorry, Donna. Donna just said something. What did you say?
All provinces, or is it kind of the same?
Donna's wondering if it's the same in all provinces. So we should say a couple of things. Every province has its own land titles system. They have their own foreclosure system. So as much as there are similarities across the country, there are provincial differences. For instance, in Alberta, we have this thing called the Real Property Report. In other jurisdictions, they call that the survey certificate. Mm-hmm. Here in Alberta, we start our foreclosure actions by something called the statement of claim. And it's just like a regular lawsuit that is specifically a foreclosure. In Ontario, they proceed generally through something called the power of sale. But so depending what province you're in, you have to know how your local rules work. But I am pretty sure that in all provinces, the as is, where is how things go. There'll be a version of as is, where is, no matter what province you are operating in. Well, James, as a cautious conservative sort of person, and as you talk about how those offers get written and what the bank / lender is absolutely not doing for you, which is anything, that makes me pretty edgy, pretty nervous, pretty. So how does a buyer reconcile certainty with the dangers as you've just described them in buying a foreclosed property?
Well, that's a great question, because there isn't really a way to mitigate that risk by providing legal protection for you as a buyer. No lawyer lender is going to remove a Schedule A as a negotiation piece. That's a non-negotiable.
Not happening.
Okay, so if we can't mitigate our liability through cleverly worded contracts and clauses, the only other way we can mitigate our liability is by translating that into dollar amount. So the point that I'm driving towards is, if you're going to be buying a foreclosure, you better make sure it's a darn good deal. And to circle back to my initial comment, just because it's a foreclosure does not necessarily mean it's going to be a good deal. So this is where, you really need to be relying on your experts, your realtor specifically in this case, because there's two pricing strategies that I have noticed foreclosing lawyers adopt. And I'd say this applies to the vast majority, if not the entirety, of the foreclosure market. So we'll talk about both of those, and you have to know which you're dealing with. Now, number one is a foreclosing lawyer will get the property appraised and then list it for appraised value. They want to recover the true cost of the property. So this is where sometimes the lawyer gets an appraisal that comes in a little high, and the property sits, and it sits long enough that you have the ability to write a lowball. Especially common in markets that are already buyer-centric, like the Alberta market, for example. In a seller's market, properties are going to get offers, which would be your BC, Ontario markets, just as a contrast. But so what we're going to see is properties that are overpriced. You can write a low offer, and then hopefully you're in the right place at the right time, and the lawyer and the bank are sick of holding that toxic asset on their books, and you can sneak one in and get a really screaming deal on a foreclosure. So that deal happened not because you bought a foreclosure. that deal happened because you strategically approached a specific foreclosure in the right way. And there's a big difference there. So again, I'm being repetitive, but the takeaway is foreclosure does not 100% equate to a deal. Foreclosure just indicates an opportunity to potentially get a good deal, but that potential exists with every other listing on the market as well. So, just to pause for a takeaway here, the takeaway is you need to be strategic with a foreclosure just like any other listing. Don't just assume it's a good deal. So it's priced a little high, you get a chance to come in a little low. And even though the lawyer and the bank are business-oriented, objective third-party vendors, everybody gets deal fatigue. I'll tell a story about a listing we had 2 summers ago. The lawyer came to us 2 summers ago. They had a property. I recommended $399 as a list price. They wanted to list for $450 because of some appraisal they had gotten. And it took us 12 months to get that property sold because we just kept inching the property down. And COVID kind of hit right in the middle of our listing cycle. So we ended up listing it at $375 and selling it for something obnoxious like $335. When if we had listed it at $399, we probably could have gotten about $375 for it right out the get-go. But because the property was on the market too long, became stigmatized, and market forces shifted the market down, which is, nobody can predict that. A buyer came in, right place, right time, right lowball, and the lawyer dealing with the file had reached their point of deal fatigue, and they said, finally, we have an offer. Let's get this darn thing sold. Yeah. So keep an eye out for right place, right time, deal fatigued foreclosures. Because that lawyer, just like any other business person, they've got a pile of paper on their desk that's their incomplete stuff, and they want to close files, move on to the next one. Yeah. So right place, right time. The second kind, and I'm going to pause for effect because this is where your caution flag and your alert needs to be raised super high. And this is where I see newer investors get tripped up and in trouble all the time. These are foreclosures where they intentionally price them below market with the plan and strategy of getting a bidding war. We all know that if you end up being in a bidding war, there's a chance that you might bid a little bit too high because you get excited about the prospect of winning a bidding war. Bidding wars, even for the most seasoned investors, often emotions start creeping in where logic should prevail. And as an investor, we're buying on logic. We're not buying on emotion. So what happens is you don't get a chance to write that bully offer or the quick offer like we discussed earlier because the offers have to go to the lawyer. The lawyer books a court date, and then the offer gets reviewed by a judge. That process creates a huge amount of time dilation where there's a week to 2 weeks where offers can just keep rolling on in. And so you don't get a chance to be in a non-competitive situation. It's actually quite the opposite. Often low price foreclosures become hyper-competitive situations because there's so much time for a whole pile of offers to come in. Yeah. And so sometimes what'll happen is if enough offers are coming in hot and heavy, the court will actually rebook the offer presentation further down the road to give more people a chance to increase their offer even more and allow more offers to come in. So from a procedural perspective, what you can expect as a buyer is usually the selling realtor will create an email chain with every buyer's agent and then keep everybody up to date as offers come in, what the offer presentation is. I've even seen a full disclosure of offers, which means that they will say what every person's offer is at, and then it just creates a perfectly visible bidding war, just like an auction house. Yeah. The flip side of what can happen, and every law firm is different, so you don't really know what you're going to get. That can be one of the fun parts about dealing with foreclosures is no foreclosure is the same because the different law firms have different internal procedures on how they're going to handle foreclosure listings to begin with. So it's a wildly inconsistent game plan, and you have to really rely on an experienced buyer's agent to ask the right questions to understand how the rules of the game are going to play for this foreclosure and what strategy applies in that set of rules. So what we're going to do is they will actually ask for all of the offers to come in a sealed envelope as a sealed bid. That way it's perceived as more fair without any tampering or bias in the situation. Mm-hmm. sometimes it can get pretty dramatic because if there's a couple of very interested properties, clients and their realtors will show up to the courthouse with a backup offer in hand to almost create a bidding war right at the courthouse. So, that's another tip is if you really, 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 really want the property, make sure that your buyer's agent actually shows up to the offer presentation date in court with a signed offer in hand as ammunition if you intend on wanting to bid up on the property. But again, know your limit and play within it. Otherwise, you can drastically overpay for a property just because of a bidding war situation. So again, a lot of people start the conversation about foreclosures assuming that, hey, it's a foreclosure, I should be getting a good deal. And then they end up in a 15 to 30 way bidding war, scratching their head as to like, what, this doesn't feel like a good deal at all. What the heck is going on? I'm now shuffling to overpay for a property that, for all intents and purposes, is run down and in really rough shape. So to circle back, there's kind of two strategies that we're going to see pricing. There's either going to be market price, which sometimes tips into overpricing, which becomes a toxic listing for the law firm. That's where the opportunity lies because, throw the spaghetti at the wall and see if it sticks. You can put in a very low offer, and if you're in the right place at the right time, the right lawyer will say, finally, the good old adage in real estate, the first offer is often the best. We'll take it. Get this one out of here. That's the way we want to be buying foreclosures. The second one is the siren's call of an underpriced listing, and then all of a sudden you're in a very, very intense bidding war where there's way too many people involved, and you're at the courthouse scratching your head thinking, what am I doing? And somebody's going to win that property, but usually the one that wins is the one that goes well above market. And the lawyer representing the file feels like a hero, and the bank's happy that they recovered as much of that debt as possible.
Well, James, that is very illuminating. The setting out of the two strategies and how those things work is, I find that fascinating. I mean, I know a lot about this, but I don't think I knew it in as much detail as you just described. So that was great. So that your illuminating conversation is provoking a whole ton of questions.
Great.
So lots of times we wait till the end and then we run out of time. But let's dive into some questions here. Wayne will put them up so I can read them, and we'll dive into these questions and hopefully get a ton of them answered before we move on to some of the next things we want to cover. So Jared says, I'm curious to know why foreclosures in Canada are not near the deals you get in the USA. I don't know the answer to that. What do you think, James?
I think it's because in the USA, it's much more decentralized. And so oftentimes you can get foreclosures before they actually hit the open market if you're willing to kind of poke around at the law house and poke around at the law firms, or the courthouse, I should say. Whereas at Edmonton, it's much more regulated. So there's a procedure that has to be followed, and everything ultimately ends up on the MLS. So, in the States, sometimes you can sneak a foreclosure at a really good deal because you just happen to have the right connections with the law firm, and it's a jurisdiction that allows that. But in Canada, everything flows through the lawyer to MLS. So it makes for a much more interesting buying experience in the States because they are so much more decentralized in so many of their laws compared to Canada that every state acts almost like its own little country. Whereas in Canada, there's so many more procedures and laws that are centralized at the national level.
Yeah, we're much more regulated. Next up, Joe says, if there's only one offer on the property, even if it's low, do the banks need to accept as long as the offer covers what's owed to the bank?
Well, that's an easy one-word answer. Nope. The lawyers will not outright in most of the time. Again, so let me add a little more meat on that bone. Otherwise, it's a very unsatisfactory no. As we know, different lawyers are going to have different ways of approaching foreclosure offers. Most lawyers will take any offer and present it at the courthouse. But then most judges will not accept an offer that's too low, even if it does cover the debt. So the lender sometimes, puts a bit of a memo in the file talking about how much debt they're willing to walk from. But yeah, they don't have to accept any offer. Again, there's going to be factors in play that are very, very similar to a retail transaction. How long has it been on the market? Is the representing lawyer experiencing deal fatigue? and how is the market playing out for this particular listing?
Yeah. Going back to your point about making sure that if you're really enthusiastic about the property, you and your buyer's agent should show up with another offer in your pocket and be prepared to bid higher. Mm-hmm. If the owner who is being foreclosed on is also following along with what's going on, and if they've got substantial equity in the property, then they also show up in court. And if it's a property that has a $400,000 mortgage and it's roughly worth $500,000, let's say that everyone's agreed it's roughly, but there's only one offer at 440. Mm-hmm. The owner can put his hand up and say to the judge, "Excuse me, I think that's not fair. I've got $100,000 worth of equity in this place, and now it looks like there's going to be 40 left for me, and that's not fair. I think we should do a little more advertising, get it out there, see if we can provoke a few more offers and give me back some of my equity." So that's something else that happens when offers are too low. If you have equity and an interested owner, sometimes they don't often get involved, but that does come up as well.
Yeah.
Where George says, where do you find the statement of claims? Well, the statement of claim is the document, the legal document here in Alberta, at least, by which the foreclosing lawyer starts the foreclosure process. So a statement of claim is filed at the courthouse by the foreclosing lawyer, and those are public documents. So, as a member of the public, you can search the records at the courthouse in order to see which new statements of claim are foreclosures. And I don't know this, James, but I know that there used to be a posting of like a printed list of foreclosures that's on a bulletin board at the courthouse. I don't know if they do that anymore. I mean, that's old tech. Might be a digital listing now, but I know that there did used to be a list of foreclosures that you could look at.
Yeah, I'd say it's probably, I'd say if anything, probably COVID more than technology has dictated how they're handling that. And, with things opening back up, it might be a good reason to just pop on by the courthouse and say, how do you handle this these days? Because I don't have the most up-to-date version of that answer. My answer would have been the same as yours, Barry. I'm a little, not quite as old school as you, but I'm close.
All right. What's up for our next question? Jared says, are short sales a thing that happen in Canada? So short sales, that's U.S. terminology to my way of understanding.
Yeah, that's a U.S. terminology. Maybe let's circle back to that question, and can you do a quick definition of short sale and then reissue the question? We'll move on to the next one and then circle back to this one. If you could just say a short sale is blank. Does that happen in Canada?
Okay, that's good. Sahil says, my realtor advised to write foreclosure offers without conditions because the bank won't like conditions. Are all foreclosure offers accepted without conditions?
That's a great question. And this I can see why the realtor recommended that, because there are some lawyers that will not accept conditional offers on the foreclosure, especially if it's a newer property or an aggressively priced property, or if it's a bidding war. I mean, we know in bidding wars, unconditional offers speak a lot more loudly than conditional offers. The reason that, so that's the reason your realtor would have recommended it. Now, if it's a realtor that doesn't have a lot of experience with foreclosures, maybe they've only done one or two, and if the only foreclosures they have worked on thus far are deals where unconditional offers needed to be submitted, then they're speaking from their experience. The fact of the matter is, a lot of lawyers and lenders will look at conditional offers on foreclosures. So it never hurts to submit it. But we know that in a competitive environment, unconditional offers, even at lower prices, still typically get looked at a little more seriously because of the guarantee of the sale. Now, I'm just going to build on that question and say this is one of the reasons I always really scream caution when we're dealing with foreclosures, because we know that you're not necessarily getting a better deal and yet you're taking on a boatload more risk because you're writing unconditionally in a scenario where it's as is where is. So if there's anything funky and wrong with that property, you are really setting yourself up for a big bad situation that you don't want to be a part of.
Yeah. Yeah, no, I agree with that, James. I think that if people are interested in foreclosures and they have the room within how a particular foreclosure is going, if they're really interested, they need to do extra diligence to try and mitigate. I mean, is the house locked up tight by the bank's property management company? Is it generally, to our knowledge, in good shape? Is it a newer property? Is the homeowner already gone? Is it in a better part of town?
Yeah.
Do I go down and see if I can get a look at the city file, which maybe you can't do because they won't let you do it. But you got to do some of those kinds of things in order to mitigate your risk. All right, Jared is back. Jared says a short sale is where a seller sells their home for less than what's owed on the mortgage, and the bank has agreed to cover the difference.
Yeah. So a property can be sold for less than the balance owing on the property. I mean, in a foreclosure situation, absolutely, because at that point, the bank owns the property, and if they're choosing to write off some of the debt, so be it. Can a seller sell a property for less than the amount owing? I would say sometimes yes. It's not an impossibility in Canada, but the seller will definitely have to have that conversation with the bank. Oftentimes that question will trigger the road to a foreclosure, as opposed to because if the seller's willing to walk from the debt, they can't just put it on the bank with no consequence.
Yeah, I think folks can get themselves tied up in a lot of knots trying to organize a short sale. What I've found with lenders is logic doesn't have much bearing on what's going on. I've had different clients do different, very reasonable presentations to banks and lenders about why their untenable situation, which everybody agrees is, I mean, the property is just not working out. It's underwater. There's issues, and everybody knows there are issues. And the owner comes up with some scenarios to say, listen, Mr. Bank, if we cooperate together and take these steps 1, 2, 3, then this is going to work out better for all of us. It's not going to be the best, but it's going to be way better than if you just do a plain old vanilla foreclosure and just bang it through. So here's my proposal. And I've seen some really quite creative, interesting, and I thought valuable proposals that lenders should consider, but they don't seem to have any ability or interest in looking at those kinds of things. So if you want a bank to be cooperative with something creative, boy, you can put a lot of effort into just in the end to have them say no. That's my experience.
I would say the practical application of that experience is exactly what Barry described. So there's a lot of things in real estate and construction that are theoretically possible, but practically very improbable to execute.
Yeah. So, all right. So that's Jared's question. Do we have any more, or are we caught up?
We got lots.
We got lots more. Well, Wayne's going to pop up.
Giddy up.
Here we go. Is there any way to swing an AFS with a bank for a foreclosure? So you want to buy it from the bank on an AFS? Jared, you are a creative guy, Jared. I love it. Jared's like always thinking, always doing. But if what you mean is you're going to say to the bank, I'd like to buy this from you by way of AFS, which is seller financing, pretty sure that's not going to fly, because that is just like way too creative for any bank to consider. What do you think, James?
That's a pretty easy one-word answer, Barry. Nope.
Hey, but good for you, Jared. I mean, keep asking. The worst people can say is no.
No, Valden did a version of that. That was going into foreclosure. Or was that pre-foreclosure?
That was pre-foreclosure.
Okay.
Yeah. Yeah, very rare. Corey says, I've seen where a bank gets an appraisal on a property in foreclosure. They give it two valuations, the real value and the fire value. Is this fire sale value typically the lowest the bank will accept? So actually, I think my recollection, James, is there's usually three values in those appraisals. There's the for sale for cash, there's the for sale with terms, and then there's just kind of a market price.
Mm-hmm. Yeah, and it's that unsatisfactory answer that is really situationally dependent of it. It really does depend. And the reason we say it depends is because, again, other factors are going to come into play, like deal fatigue, time to market, and so on and so forth. So, a fire sale property or fire sale valuation is a lot more likely to happen, 60, 90, 120, 180 days on market than it is day one on the market. So, when it comes to foreclosures, there's definitely a right place, right time. And oftentimes, if the fire sale value is put out first, they're doing it to prompt a bidding war, not actually expecting to sell it for that low.
Yeah.
So think back to the two strategies. If a price seems to be too low to be true, it probably is, and there's a reason that it's that low. And then, you call your realtor excited saying, "Oh my gosh, Mr. Buyer's agent, this property is so cool and it's priced so low. Let's go write an offer. Let's go take a look at it." Okay, let's go. And then the buyer's agent calls the selling agent saying, "Hey, tell me about the property. It's got 12 offers." Okay, that explains why that's 50,000 less than anything else like it in the neighborhood.
Yeah, and those values, Corey, the values that the bank gets through their appraisal, and there's always an appraisal done, in my experience, as part of the foreclosing lawyer starting the statement of claim process. They're always working an appraisal into that. Those appraisal values are guidelines. That's all they are. The bank has no obligation to pay any attention to that appraisal. They have them as guidelines and they kind of work into the process, but the bank is definitely not forced to do anything with those except to say, all right, here's a range. That's all those mean.
Mm-hmm. Yeah, that's a great word, Barry, is guidelines. There's no obligation, legally or otherwise, for the lender to utilize that appraisal as a binding way to accept an offer.
Yeah. All right. Okay. I'm sure there's more. What else we got here? Come on, hit us, you guys. What are those questions? That's it. My goodness. Okay. All right. So James, we'll go back to where we are. We were talking about the offer process and the bidding war. So the listing low sounds like the strategy in Ontario. I understand a lot of buyers or sellers, realtors down there list properties low in that hot market to get bidding wars going. So sounds like that happens here sometimes as well.
Yeah. It's in markets like BC and Ontario, where there's already bidding wars on market price properties, a slightly more aggressive price point, fires a bidding war right up. And, even in Alberta, especially during the spring months, we'll see that happen all the time, where a slightly more aggressive price will inspire a bidding war.
Yeah. Yeah. And just kind of circling back to Jared's question about an AFS, I think there's a chance of in a pre-foreclosure situation, when you find out that somebody's in trouble, the bank hasn't quite foreclosed on them yet, but the bank will be foreclosing because they're behind payments and the bank's calling, when are you going to, nice phone call, when are you going to pay, demand letters saying, if you don't pay, we are going to send it to foreclosure. I think with smaller entities, we have one example with a credit union where one of our students went along to the credit union and had a chat with him and said, listen, here's this. We all know what's going on with this property. Here's who I am. I want to do this to the property. I've got a renovation plan. Here's what I think the value is. You might get some cooperation from a smaller credit union style lender in that kind of a scenario if you can make the case. Those smaller entities do seem to be a little more nimble. They've got people in their local branches who can make decisions. But, in all my years of practice, I've only seen one of those. So I don't want you to go away from here saying, Barry said we could do AFS with these, because I'm not saying that. I'm just saying if it's a smaller, like credit union style lender and you catch it in a pre-foreclosure, you might have a chance to make your case with the lender that you can step in. And as long as you have some cooperation from the owner, then you got some chance there. So James, something we've experienced recently with COVID, especially, is what happens when everyone's in court, when the various offers have been gathered in, the foreclosing lawyer has them, and he then books a court date and he goes off to court, and the presiding judge or master looks things over, and they're looking to get an offer approved. What kind of coaching do you have for folks on the timelines that they need to put in their offer, or the timelines they can get for closing in COVID when there's,
Yeah.
So, if I just back up a little bit, so into court on the day, consideration of the offers, that the judge or the master plucks our client's offer out of the mix and says, this is the one I'm approving. I know that what happens then is all of the verbal chit chat that goes on in court has to be reduced to a written order by the foreclosing lawyer. That written order has to then go over to the presiding judge or master later. You're in court, you write your notes about what the decision was. Lawyer goes back to office, drafts up order, then he emails it off to the presiding judge, who then signs the order, and then it has to go to the courthouse and get filed. And it's that filed court order saying, yes, James, client, you're the winner. It's that filed court order that takes the place of a condition removal. It's now a real deal when the judge has actually signed an order. Then that order has to go off to the clerks and get filed. And only when the filed order gets back is there a real deal that can then proceed. So do you have any coaching for your folks on how to write up those timelines? The closing date. What is the completion date going to be when you write up a foreclosure?
Well, the reason I'm smiling is we dealt with this a couple of times over COVID. And so the short answer is give it at least 45 days, because things are like, the courts are delayed, and they're just getting caught up now. And we've had a couple of experiences where the closing date was imminent, and then we get a notice from the court saying can't close yet, legal delays, court delays. And we had one of our foreclosure closings get pushed back by almost 6 weeks. And unfortunately, as a buyer, you're at the mercy of the court. So I would say the question isn't so much what should I put in the offer, because at least 45 days would be a minimum, probably 60, but also have in your mind a contingency plan, both at the lawyer's end, so your lawyer representing you, so that they can be ready for paperwork delays, on the lending end, so that if the lender is delayed or has a different timeline for advancing funds, it switches things up. And have a final contingency plan for yourself. If you're a contractor that's renovating a foreclosure that needs to be foreclosed on, that needs to be executed on, know that you might get a little bit delayed, so have things be tentative with your trades. If the foreclosure is in great shape and you're actually moving into it, have your moving plans. It's annoying to kind of be on a tentative penciled in time schedule, but that's going to be part of the reality of the situation. And so instead of hoping it doesn't happen, plan for it just in case.
Yeah, definitely. For closing on foreclosures, you have to be you have to be flexible, because all of those things can happen. They just I had one recently where I suggested to my client that they write into their offer that the deal should close 2 weeks after the foreclosing lawyer provides the final court order, which was accepted because I guess they thought, well, we know we can't do anything until getting the filed order is on us, and if they're going to close 2 weeks after that, that's fine. But what that didn't do was give our buyer certainty. It allowed us not to keep shuffling back and forth with dates. As the 45-day timeline was expiring, you have to maybe get an extension of it. But it's the key in that whole conversation is flexibility. Foreclosures, to actually close them are a dog's breakfast. They're at the mercy of the court and COVID and timing. So everybody in that foreclosure process has to be very flexible. If you think you're going to fill up a foreclosure with tenants, don't go signing leases that obligate you to provide possession on a date that you don't know you can meet. That can expose you to some liability.
Yep, well put, because as we know, your as is where is.
Yeah. Yeah, a whole bunch of timing, and then you get it, and it wasn't anywhere near the way it was when you had to look at it to start with. So, well, James, I don't know. I don't even know if I want to be involved in foreclosures. There's got to be an upside for all of the dangers and caveats and watch outs that we've just talked about here. And I'm sure you do when you talk to somebody that says, James, I'm interested in foreclosures. You give them a version of what we've just done today.
Yeah, I mean, I hate to say it, but my conclusion after being in the business for 15 years is foreclosures are very rarely all they're cracked up to be. And because of, American real estate investing podcasts, and, everybody loves bragging about their biggest win. And sometimes somebody's biggest win is a foreclosure. And so when we think foreclosure, we think distressed seller, property that needs a lot of work. And when we think about properties that need a lot of work, we often think there's an opportunity to add value. But the dark underbelly of the foreclosure buying process is you as a buyer take on an unbelievable amount of risk because of the as is where is. It's a much more time consuming and therefore mentally taxing process because of the fact that there's more paperwork, and that paperwork has to go lawyer, courthouse, and that's a very stretched out type of a process. And then often you're going to be in a bidding war that is, again, very time consuming and mentally taxing because of the court factor. And then every so often you find a foreclosure that you can get below market value because of time and place. But when you consider that, an average retail seller who happens to have deal fatigue because their property has been sitting on the market 120 days may just as likely be interested in selling a little bit below market value because they're sick of holding the property. If you compare apples to apples, you have just as good of a chance of getting a great deal from a normal seller as you do from a foreclosure without all of the extra risk and all of the extra paperwork. And I'll give you an example right now. We've got a property. I'm not going to disclose too many of the details because it's still a live deal, but we started the price in the mid 400s, overpriced it a little bit, missed the mark. We just dropped it to that nice, comfortable $399 mark. And I can tell you, the vendor in this case has an extreme case of deal fatigue. They've reached out to me many times saying, whatever offer you can get us, we'll take a look at it. And we're in the process of negotiating an offer right now where the final price is going to be in the ballpark of 20 to 30,000 less than they initially thought they were going to get for the property. And they're okay with it because they're sick of owning this darn thing. Summer's coming. They have other things they need to move on to, and away we go. And that purchase for the purchaser, we're representing the seller, is going to be a great deal compared to market value without all of the liability and strings attached of a foreclosure. So my advice is, don't put foreclosures on a pedestal. Approach them like you would any other purchase, and be very, very cognizant and aware of the extra liability and the extra procedure associated with buying them.
Mm-hmm. No, I think that's good coaching. And when for people to get a sense of the contrast between the normal market, where a seller might have deal fatigue, and the foreclosure market, if there's how many active listings do we have in Edmonton right now? Let's just pick Edmonton because that's where I am. Any rough idea of what's active at the moment?
You know what? Of course I'm sitting in front of I'll give you a number of precision if you give me just a second.
Precision number. I know.
Yeah, but
that number would be close to you.
Yeah, let's get up to the date, real time. How many listings do we have for sale in Edmonton at this exact moment in time, including all property types? 6,404 properties for sale in the Edmonton city limits. That does not include the burbs, so that won't include your St. Albert.
6,400. And of those 6,404 listings, how many are foreclosure listings?
Well, that's going to take me an extra couple of minutes to.
Just a rough guess, James, is fine.
My guess. Well, now you've got me curious. But if I had to guess, I would guess that Well, you want to play a little over under, Barry, because I'll have the answer in about 45 seconds. So I'm going to guess that there are 146. What do you think?
I'm guessing under.
Well, Barry, you have me whipped. There are only 56 foreclosures for sale in the Edmonton market right now, in the greater Edmonton area. In all of northern Alberta, 88. So,
all right.
Yeah, there you go.
Let's just call it 64 because that's between those two numbers.
Yeah.
And 64 divided by 6,400 is 0.01%, something like that. So
tiny little fraction.
It's a tiny little number. So folks, I think part of the coaching here is you can blow your brains out chasing the few foreclosures that are around, and maybe you get a deal. I mean, I know people who've got good foreclosure deals. I do, and James does as well.
I do.
But those few deals get the mythic status, and so rather than chase the 0.01% number of deals where you're going to burn up a whole bunch of time and trouble and extra legal fees and potential heartache and
legal exposure. I can't.
Yes.
I know I've said it tons of times, but
tons of exposure. You're probably better off talking to James and getting him to look at the other part of the 6,400 deals that might fit your
marketing.
That might fit what you want. So let's see. Are there any more? Corey says, how many sellers are open to an AFS versus under foreclosure?
Say pre-foreclosure.
So Corey, you must mean a pre-foreclosure.
I think that I'd interpret that question as how many people who are in pre-foreclosure would opt to allow themselves to enter foreclosure versus doing an AFS.
Yeah.
And I'd love to hear your version of that answer, Barry, because you handle way more AFSs than I do in a given month.
Yeah. Well, as a lot of folks know, an AFS is this thing called an agreement for sale, which is a seller financing model. And in a case like this, you'd go along to seller who's in a pre-foreclosure situation and say, all right, I'd like to buy your property. And how does it sound to you if I take over your mortgage, taxes, insurance, and all the maintenance on the property? And then you got to work your numbers. So, I think that might be attractive to a seller who's who is facing foreclosure. If the foreclosure rock is rolling down the hill and going to crush him soon, if you can come up with something that's a win-win, if he owes money to the bank, you're going to have to pay up the arrears. But there are lots of reasons that folks don't want to be foreclosed on. They know it ruins their credit. It's a huge financial stress and burden. There's many, many reasons why people who are in financial trouble will listen to a win-win pitch. So pre-foreclosure, there is a good chance to get in and negotiate with a seller and maybe purchase from them by way of AFS. One of the things you have to, though, be concerned about is whether or not the lender, especially if the term of the underlying mortgage is looming. Let's say the mortgage matures in 6 months. Part of every AFS deal is usually you want to get about a 4 to 5 year term out of it. And you have no idea when you buy by way of AFS whether or not, even if everything's brought back into good standing, whether 6 months down the road when that mortgage term matures, will the lender offer the usual renewal to the owner? Because that's what you need. You need the owner to renew for another 4 or 5 years in order to make it go. So that's one of the dangers in those. And sometimes you have to dive in a little deeper and get the lender involved and have a really good discussion about who you are and what you plan to do. So it's possible. Yeah, I would say. Donna, you're saying?
Yeah, he commented.
Corey said AFS generally. AFS and a non-foreclosure, the rest of the 6,400 properties. Well, an AFS in a non-foreclosure situation, Corey, You just need to find a seller who is motivated to be your bank. It's got to be some seller motivation in there. AFS is a very powerful tool especially in a flat to negative market where a seller with a mortgage who's got some financial issues, where he really needs your help, where he needs you to solve his problems. So, I mean, there is lots of room there, although that's at least mildly off the topic of what we're doing here today. We didn't want to turn this into a foreclosure. Into an AFS exposition. Although I love talking about AFS, of course I do.
Mm-hmm. And if I can chime in there, Barry, I would say the real light bulb moment there is that, you're going to get a better opportunity to do a cool deal with more flexibility in negotiating pre-foreclosure. Once the foreclosure hammer has dropped, it's in the hands of the lawyer, and it is a court-ordered sale. It is a very rigid process that doesn't have a heck of a lot of flexibility. And again, the as is where is. Whereas if you find somebody in a bad situation pre-foreclosure, you can go through the specifics of their scenario and provide a solution for them that can create a really cool deal. And so, I mean, I'll just put a big spotlight on Barry. That's what his creative real estate is all about, is helping people who are on the path to foreclosure get a solution to purchase, or sorry, you're purchasing a solution to sell that helps them avoid that foreclosure, which is a really nasty situation. And so, that's obviously a segue to, tune back in next time, folks, because that's where Barry excelled in, is teaching you the strategies to help get somewhere good before foreclosure ever happens in the first place.
Yeah, no, that's true, James. I try and be kind of mild about this, but our focus workshops really are the key for people who want to implement some of these creative strategies. There's just no way around that. There are lots of opportunities, and the right amount of education is what people need to take advantage of those opportunities. So,
yeah.
Well, we've come to the end of this one, and so, folks, for any of you who are listening, if you don't understand that James knows what he's talking about in the real estate game, if you didn't understand that before, I hope listening today gave you a big old light bulb, as you said, that James and his crew at the Mogul Group really know what's going on in real estate. So if you're interested in any kind of purchasing or selling, if you're buying, if you're listing, doesn't matter, tune up with someone who understands what's going on and who understands not only the mom and pop market, but also the investor market from all angles, works at it full time. They do a great job. Call the Mogul guys.
Thank you so much, Barry. Yeah, and we do orchestrate and architect quite a few AFS deals. So, AFS often we think about it in terms of distressed sellers, but if you're a seller who just can't get the dollar value today that you really want for a property, but you want it off your plate, we can find you a buyer who will be more than happy to use an AFS as a financing strategy to get you the future value of your property. And it usually comes together in a nice, neat bow. So just a thought jogger for not only the buyers, but the sellers as well.
Yeah, it's a far more useful and flexible tool than the low equity, no equity side of it. There's lots of applications for AFS in all different kinds of real estate. So, and not very many realtors know what an AFS is. So there's another aspect. James and his gang have come to our courses, and they know what we do. And so another good reason to talk to the Mogul Group.
Thanks, Barry.
James, I think we're done for the evening. So thank you very much for showing up and doing a great job like you always do.
Hey, thanks for having me. It's a pleasure to chat in on the broadcast, and thanks to Barry for all the great work you do. You're helping lots of people learn about creative real estate, and those deals are great ones. So keep tuning in and keep learning 1 week at a time.
All right. Well, thank you again, James. Thanks, everybody, for tuning in. And at that point, I'm going to go down to the ravine and pick some Saskatoons. Donna's making me a Saskatoon pie.
Oh, that sounds awesome. Have a good one, everybody.
Thanks, everyone. Good night.